Hello, I hope you guys are doing well. It's me, Adnan Rehman. I'm the market analyst for Errante. In this video, I'll explain you everything regarding the Bank of England monetary policy and a few other important concepts that you need to be focused on. Okay, I'll not touch this tariff story on Canada and Mexico because this is what I've already explained earlier. I'll focus on this one, the weakened euro and GBP. You know, as you are, if you are following my videos, you come or you might know that Trump has not imposed any tariff on euro or pound yet, and he was not even looking at this side. But right now, there is a speculation or expectation that he will be imposing tariffs on them as well. Okay. So what I think is that if there are tariffs imposed on GBP and euro, or UK and euro will be hit the most as compared to the UK because UK is a service-based economy. Okay, so keep this in mind. UK won't be hit the most, but euro will be. So keep this in mind. UK might be a little bit in a positive tone as compared to a tone from euro. Keep this in mind. Okay, and now these are things I've already explained. I won't touch this one. Besides this, now let me take you to this place. Okay, this is the banking report from Bank of England. You can see the members list over here. This is the member list. I'll change the color. This is the member list you can see over here. Now this part is very important. Okay, so this line over here, this represents those members that have voted for an increase. This one have those members who have voted for to maintain the rate, and this one is for reduction. Okay, so now the main thing you need to focus on is like say this one over here, green, Catherine, okay, Phil and Ramston, not Ramston. Okay, these people or these members are those who are like they have not voted in a higher quantity for a reduction. Okay, see, it's only one vote for reduction. Men has not even voted for a reduction, and this Phil is only one time. Okay, so if we get an increase in these numbers, like for example, like Megan says that okay, I want rate cuts, okay, or Catherine says okay, I want rate cuts, okay, or Phil says okay, I want rate cuts, then this can be a bearish scenario for the GBP, and we can see rate cuts. Even though if we don't see rate cuts, okay, this can be a clear bearish signal for the pound. So you need to keep this in mind. Okay, when you see the news, okay, the main focus shall be on this one. What are the members voting? It's called voting. Okay, and then besides this, you need to focus on the projections of growth. Okay, projections of growth and inflation. Okay, because even if we see that the inflation is higher and we get this some sort of cut signals, then they won't be able to cut because of higher inflation. Okay, so this, if this and that scenario prevails, so what I'm trying to say, if we have any of the member moving to this cut scenario, then this can be bearish for the UK. And if we have somewhat of sluggish growth and inflation going towards the downside, that can also trigger bearish reactions for the UK. Okay, besides all of this, all of the sudden we just have a view, or there is a news that tariffs have been imposed. Okay, tariffs have been imposed, then that might also be a negative news or a bearish news for the UK. And what percentage of tariff that increase the intensity of this bearishness? That is like 15%. Okay, because for the benefit sake, like we look at the Canada, it's been like 25%, and globally is 10%. So somewhere around 10 and 15% is something that can bring a pound towards the downside. Okay, so keep this in mind. This is very important. Okay, now getting back to the sheet, what we can see, let me explain you over here. This is the forecast of Bank of England, its report. Okay, what can we expect? We are expecting a downfall. okay, throughout the year, a downfall towards the downside. This is what is expected from the market, or the market players are expecting this. Okay. Besides this all, now let me take you to the court report. You know, the court report, I hope you guys are aware of it. And what do we see in the court report? Okay, GBP, the UK is on a 50%. Okay, it's a 50% game for the GBP. Okay, besides this, let me get rid of this one. Besides this, if we look at the open interest, okay, net non-commercials and the open interest percentage, what do we see? GBP is on a negative 3.88%. So it's not a good picture for the GBP right now. Okay. And ahead of GBP, it's US oil taking the lead, the USD taking the lead, and the gold that's taking the lead. Okay. What is this? This is open interest. Okay. The percentage of non-commercials to open interest. Okay, and now this is a lengthy topic, I won't be explaining it right now over here, but I hope you can understand this. Those traders who are aware of this might have got the view what I'm saying. Okay. Okay, now besides this, this is the court report for the latest court report, and I'll show you. Please look at this one. This is this blue line over here. This is the net positions. Okay, the red ones are the short positions. Okay, the green ones are the long positions, and then this blue one is the net position. Okay, so net means long minus short. Okay, so you can see that from October 2024, or even I can look at this part over here from August 2024 and then October 2024, all we see is a downward movement in the net positions of the GBP. Okay, this itself shows a bearish sign. It's not basically good sign for this GBP. Okay, in the market. And if you want to see a detailed view of this one, then you can have this position as well. Like see, these red ones are the short positions. Okay, and this green ones are the long positions. So now you can see that the shorts are getting higher or getting more than the long ones. So keep this in mind. And later on you can have this, this is the main chart, okay, that this whole thing is derived from. Okay, let me take you to this place over here. Okay, what I love to see is this one, CZ index, it's on 39, negative 39. This is also something that's giving a bearish signal for the UK. Okay, and then we have this is our timetable over here, by which we can understand that on the 6th of February, we have this interest rate, and the current rate is 4.75 and the expected is 4.49, which means it's going to a cut. Okay, the real interest rate is 2.25 and probable move is cut, whereas Fizzy index is on a 39, negative 39. Okay, getting this out of the way, now let me explain you the possible scenarios. Okay, the possible scenarios. Now I want your attention over here. So what is expected? Okay, what is expected over here? The current expectation is of an 87% probability of a cut. Okay, and how much is the cut? It's 25 basis point. Okay, so 25 basis point of a rate cut is expected. This itself is a bearish news. Okay, and then these are the options. Okay, if we have a rate cut, okay, then this can, like ignite or pressurize further rate cuts. Okay, or we can, in in a professional term, we can call this aggressive easing cycle. Okay, you can google up this term. It means easing means reducing the interest rate. Okay, aggressively means you have to do it in on purpose in a higher speed. So at least you can google up, or I'll have a separate webinar for this term. It's very, very, very educated term, and you must need to know what this means. Okay, in other words, you just understand that it will go for a rate cut scenario. If these cuts are there and they are saying, okay, man, with the passage of time we will have 3+ cuts. Okay, 3+ cuts means more than 3 cuts. If that is a scenario, we have more than 3 cuts, that means we can expect the GBP to go more downwards. Okay, keep this in mind. On the other hand, if we have this scenario in which they say that we will go for a hold, okay, hold. Okay, if they're saying for a hold, then this can be a positive scenario for the GBP, because they will go for a hold only if they are acknowledging that the inflation persists. Okay, in that sense, in that time, this can be a bullish signal for the GBP, but a shorter one, shorter term, against the USD. But this can be a pretty bullish against the euro. Okay, so euro and Canadian dollar. So keep this in mind if we have this issue. Okay, but you need to keep one thing. Even they are going for a rate, steady rate, okay, or a hold rate, they must address the market that there is no easing ahead. Okay, if they say that okay, we are holding for now, but there is easing ahead, then this is a bearish signal. Okay, but if they are saying we are just holding for now and there is no easing, okay, then this is the bullish signal. Keep this in mind. You must be that fast in interpreting the news. Okay, I repeat, let me repeat again. If they say that we are going into hold position, okay, the first option is hold, and with hold they say no easing, no easing further. So this is bullish. Okay, and if they say hold plus easing, okay, what does easing mean? It means reducing the interest rate. Okay, so this is bearish. Okay, and this bearish and hawkish doesn't imply with the USD, because obviously the USD is king right now. This will imply to the euro, CAD, somewhat of NZD and AUD. Okay, keep this in mind. And then we have this dovish guidance over here. Any future dovish guidance, like see the tariff, let's suppose tariffs are imposed, all of the sudden tariffs are imposed, and they are saying due to this tariffs we will see GDP going downwards. Okay, this is some sort of a guidance they are saying, or they are giving some expectations. That is an issue for the GBP, or any other sort of a thing that they can say that like our GDP is going down. Any other guidance they gave, which is totally presumed to be negative, that can bring further negative pressure on the GBP. Okay, now what next? Let me take you to the chart. This is the chart of the GBP USD on an H4. What we need to see is the 50 and 20 period moving average. 200, sorry, I don't know why I say 20 every time. Okay, so this one is, let me get into red. What shall I read? Okay, this one is like 200. Okay, and this one is 50. Okay, so what we know is that there is a huge gap over here. This one and this gap needs to be filled. And how will it be filled? Obviously, the market needs to come up and then it needs to come down. So this will be purely technical picture. This is a technical picture. Don't mix up with the fundamentals. Okay, don't mix up with the fundamentals. This is a pure technical picture. It's a gap that needs to be filled. Okay, now where this and when this is gap start? Okay, it started over here. The whole picture begin from this inside bar, this one, this inside bar, this is the high and this is the low. This inside bar has played its 100% extension. I really love to watch the inside bars. You can see inside bars are very, very, very accurate, but the daily and the weekly ones. Okay, once this was done, okay, this was, you can, in easy words, you can take it, read it as profit taking, or liquidity grabs. Once this is done, okay, we saw this movement towards the downside and this test over here. Okay, this was something that I marked in my, in my technical analysis in the GBP blog post for Errante as well. You can see it over there as well. And then the main thing was these order blocks. Okay, these ones, I have properly marked these order blocks over here, this one, especially this one, and there was a smaller one here on H1 as well. So the same thing is happening on the 200 period moving average. So now the market has, it has found some support on this order block that was responsible for this earlier move to the upside. So what can happen, that until this all tariff story on the GBP and the Bank of England, things are like the dust settles, we can see a movement in this zone. Okay, from here, okay, movement in this zone. So if there is a pretty bad news in the GBP, okay, then you can expect the market to go further downside. Okay, so now the fundamentals are playing its game. Okay, so if you have any questions, please do let me know. I'm more than happy to answering it. Okay, and nice analysis and happy pips for you. Okay, have a good day.